Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. In today's credit landscape, understanding which issuers are most likely to grant you higher credit limits is more important than ever. Consumers want access to larger lines of credit, not only for convenience, but also for the benefit that comes with higher limits, like lower utilization ratios, improved credit scores, and the financial flexibility to handle large purchases without being penalized by interest or with fees. This video will serve as your comprehensive guide to the issuers that are known for offering the most generous starting limits, as well as the ones that tend to increase credit limits more readily over time. Now, this ranking is going to be based on market trends, issuer behaviors over the past several years, and general patterns observed over millions of consumers, as well as my own personal experience. If you check this channel, I have videos on almost every single financial institution. I've went to the banks, I've opened the accounts, I've applied for credit cards, and I've documented my entire process. Now, every issuer is different. Every consumer profile is unique, and no bank treats every applicant exactly the same, so you always want to keep that in mind. Still though, there are certain credit card companies that consistently lean generous while others tend to approach credit limits more conservatively. So throughout this video, you'll learn which issuers are known to open the doors for you and which ones guard the door more closely, and then which factors influence your overall approval odds and starting limits more than you realize. So with all that in mind, let's begin with the issuer that has built a reputation for consistently offering the highest limits on the market. Number one is probably no surprise to everyone, but that's going to be Navy Federal. For many consumers, Navy Federal Credit Union stands at the top of nearly every list when it comes to credit limit generosity. It doesn't matter whether you're a seasoned borrower with years of positive credit history or you're someone who's obtaining one of your first major credit cards, Navy Federal has repeatedly demonstrated a willingness to provide surprisingly high credit limits right from the start. This tendency is partly due to the structure of Navy Federal itself. As a credit union, it does not operate with the same profit-driven approach that characterizes major national banks. Credit unions, including Navy Federal, will focus on serving their members rather than just trying to maximize returns for shareholders. That member-centric approach often manifests through better loan rates, more flexible underwriting standards, and in this case, higher than expected credit card limits. Another important factor is Navy Federal's membership base. Because the credit union caters to military personnel or Department of Defense employees and their families, it often works with younger consumers who may be establishing independent financial lives for the very first time. With that mission in mind, Navy Federal has intentionally structured many of its credit card offerings to give members a strong financial start, which includes being more flexible with initial limits. Now, the only meaningful barrier to accessing these high credit limits is eligibility. You must qualify for Navy Federal membership through military service, employment within the Department of Defense, or an eligible family connection. If you can gain access to membership, Navy Federal is consistently one of the best institutions for both initial credit limits and future increases. Now, if you check my channel, I have so many videos on how to get $80,000 from Navy Federal, as well as how to get $25,000 with their business credit card. And then I have videos about the auto loans, the personal loans, and everything in between. And I have personally been approved for almost every single Navy Federal product. So I definitely have experience with this. I highly recommend that you check my channel. I have an entire playlist on credit unions that will show you exactly what you can do to get approved for their products. Number two on the list will be American Express. American Express has long been associated with premium credit products, and that reputation extends to the credit limits that it offers. American Express generally does not serve as a first card issuer for most borrowers. In fact, most applicants approach American Express after building some credit history elsewhere. And because of this, American Express typically has more information on applicants before approving them, which leads to more generous initial limits compared to issuers that commonly serve first-time borrowers. American Express evaluates income, credit score, payment history, and account age to determine both initial limits and future increases. If you come to American Express with a strong credit profile, you can usually expect a credit limit that reflects your established reliability. If your history is less robust, American Express may start you with a moderate limit. However, the company is known for providing favorable credit limits after approximately 90 days up to 6 months of responsible usage. Many cardholders report significant boosts to their credit lines during the first year. The conversation around American Express would not be complete without addressing the Platinum, the Gold, and Green cards, which traditionally marketed as having no preset spending limit. And while these cards do not function with traditional credit limits, the idea that they do not contain a limit whatsoever is misleading. These cards can impose internal spending thresholds based on your historical usage, your payment behavior, and financial profile. And although these thresholds are flexible, they do exist, and cardholders can experience decline charges if their spending exceeds American Express's internal assessment of accessible risk. I'll give you an example. I have a video on here where I talk about having a $100,000 spend over time limit. At some point on my American Express Platinum, I did spend around $20,000, and American Express did ask me to pay it back immediately. I did not do it. When I didn't do it, they actually slashed my limit and gave me a preset spending limit on the Platinum. I paid that off for a few months, and then it went back to a no limit card. It went back to a charge card. However, if you don't have a spending pattern that reflects the amount that you're spending on the card and payment history, of course, they will cut your limits. Again, I have an entire video on this if you want more information on it. While American Express does have very strong limits, you do need to be careful about getting your limits cut or them asking for documentation after you get to a certain point. They will want to know how much money that you make, I believe, right after around $25,000 or so. So in short, American Express is an excellent choice for borrowers who already possess positive credit history and wish to access higher limits with the potential for predictable increases over time. But once again, once you get to around that $25,000 limit, you will need to present income in order to keep moving forward. Number 3 on our list is Chase. Now, Chase is another major issuer known for offering higher credit limits, but its approach is more selective than some of its peers. Chase's approval algorithms tend to favor applicants who already have established credit relationships, either with Chase or other issuers. And for that reason, consumers applying for their first credit card may find it more difficult to be approved with Chase compared to other institutions that frequently grant beginner cards. When an applicant arrives with a clean and documented history of responsible borrowing, Chase is usually willing to extend credit limits that are noticeably higher than those offered by many other competing banks. Now, this is especially true for applicants holding strong income figures like low utilization ratios and several years of credit activity. However, Chase does have a reputation for giving relatively low limits for first-time borrowers or individuals with thin credit profiles. It's not uncommon for new borrowers to receive starting limits as low as $500, even if the same bank would approve a different applicant for $10,000 on a similar product. Chase is also known to be somewhat conservative when it comes to credit limit increases, and while increases do occur, they are often less frequent and less substantial than those offered by, let's say, American Express or Navy Federal. Now, I have an entire video that walks you through how to actually get credit limit increases with Chase. I also have videos on how I started with a very low limit of $1,500 and then how I worked that limit up to $10,000 in a few months with some good strategies. If you want to watch that video, I'm going to link it right here. And again, throughout this video, I'll probably refer back to many videos on my channel. Again, I've done this for a while, so I've pretty much touched on almost every financial institution. The fourth bank on our list is going to be Wells Fargo. Wells Fargo's credit card division has transformed significantly in recent years. Historically, the bank was often perceived as conservative when issuing credit limits. However, since modernizing its credit lineup, Wells Fargo has demonstrated a willingness to offer higher starting limits on many of its newer products. This shift appears connected to the bank's desire to compete more aggressively in the national credit card market. By refreshing product offerings and improving consumer incentives, Wells Fargo has positioned itself as a more generous issuer than it once was in the past. For applicants with substantial credit history, strong income, and consistent repayment patterns, the bank's top cards often will come with competitive starting limits. There are some exceptions, particularly for products like the Built MasterCard, with some applicants reporting lower than expected credit limits. Nevertheless, across the broader Wells Fargo portfolio, they do have consistent cards that note higher credit lines than in the past years. For example, Wells Fargo offers cards like the Key Plus card or the Choice Privilege card, with the Key, for example, being a card that you can actually get pre-approved for. And I've seen limits like for myself for around $11,000, $10,000, $12,000. I think the highest pre-approval I've ever gotten was around $18,000. And I have some videos that show you cards that you can get with guaranteed limits. And again, those Wells Fargo cards, they used to have very low limits, but now you can get some pretty good starting limits to begin. But I would recommend using those cards that they have the pre-approval offers for, or if you already have a relationship with Wells Fargo, like a checking account, savings account, you've been with them for a few years, then I highly recommend checking out some of their regular lineup cards and then seeing what limits that you can get with those. I believe at the time of recording this video, they do have pre-approvals on those cards as well. And because of all these changes, Wells Fargo has earned a stronger ranking in 2026 than in previous years. Number 5 on our list is going to be Citibank. And Citi occupies a consistent, predictable position in the credit card ecosystem. It rarely surprises applicants with exceptionally high credit limits, but it also avoids the reputation of being overly restrictive. Now, most consumers approved for Citi credit cards receive moderate to above average credit limits that reflect their financial profile without stretching far beyond them. Citi's measured approach extends to credit line increases as well. The company is not known for dramatic or sudden limit increases, but it does typically reward responsible usage with steady growth. So for many consumers, Citi represents a balanced middle ground of generous enough to be useful, but not typically a source of headline level credit limits. So here's what I would recommend. If you have a relationship with Citibank, a checking account, savings account, you leave money there, you are far more likely to get higher credit limits. Then I would definitely recommend checking them out. They should also have a pre-approval for their credit cards at the time of recording this video. I also have an entire video that goes over Citibank. I highly recommend that you watch that if you want to learn more about their credit card products. So for applicants that want predictability and stability, rather than just having the usual high credit exposure, Citi remains a dependable option for you. Number 6 on our list is going to be Capital One. Now, Capital One is perhaps the most challenging issuer to rank because it behaves differently depending on the applicant's credit experience. On one side of the spectrum, Capital One is known for approving first-time borrowers and individuals with limited credit history and those who are rebuilding their credit. These approvals are beneficial, but they often come with very small initial limits that can remain unchanged for long periods of time. And this phenomenon has become widely known as the Capital One bucket. I have an entire video about this if you want to check it out, but it's a situation in which a customer's credit profile is categorized early, resulting in a difficulty to obtain higher credit limits on the original card, regardless of how much your credit improves in the future. And many customers report that Capital One is slow to raise their limit on beginner cards, even after years of responsible usage. Now, on the opposite side, Capital One has proven to be extremely generous when it comes to applicants who already possess strong credit history and solid financials. Now, for these customers, Capital One has been known to offer unusually high starting limits, sometimes exceeding even $20,000 or more on their premium products. Some consumers receive the highest limits from Capital One alone. So oddly enough, Capital One sometimes denies credit limit increases on existing cards while offering significantly higher limits on new cards approved with their lineup. So this inconsistency makes Capital One one of the most unpredictable issuers to categorize, but nevertheless, consumers seeking high limits should understand that Capital One does have enormous potential for those who enter with strong credit profiles. Number 7 on our list is going to be Discover. Now, I wanted to put Discover right after Capital One because at this point, everyone should know about the Capital One and Discover merger. But at the time of recording this video, they are still two separate institutions. Now, Discover offers a unique model compared to many other issuers. Although Discover is often conservative with initial limits, they frequently approve applicants for smaller lines. The company is known for rewarding consistent usage on time payments with substantial increases. Cardholders who make Discover their everyday card or at least a primary card in their lineup frequently see their credit limits climb rapidly over a period of 2 to 4 years. Discover strongly favors cardholders who use their products regularly, who pay in full, and demonstrate reliable financial behavior. On the other hand, consumers who treat Discover as a secondary card or rarely use it may see little movement in their credit limits. Discover doesn't typically raise limits automatically for infrequent users. Now, as of 2026, Discover again has been acquired by Capital One, but we will see some new transitions in the future and there will be some policy changes. Although this transition may impact Discover's future policies, there is no immediate indication that the company's current structure will change. So for now, Discover's long-term growth potential remains intact. For number 8 on our list, I'm actually going to combine two banks and kind of put them in the same place, and that's going to be US Bank and that's going to be Bank of America. So Bank of America and US Bank share many similarities in how they approach credit limits. Both issuers offer reasonably competitive starting limits, but their generosity increases significantly when customers establish deeper banking relationships. These relationships may include checking accounts, savings accounts, investments, or mortgage products. Now, for Bank of America in particular, I worked there. I worked in the preferred rewards department, so I really understand exactly what goes on with these credit limits. I've seen $100,000 limits, $80,000 limits. All of these limits, again, were based on preferred rewards, which are people who leave at least $20,000 up to $100,000 in their Bank of America account. So that kind of lets you know how much money you need to leave in order to get these crazy limits. So for consumers seeking the highest possible limits for these banks, consolidating financial activity under the same institution often produces better results than applying for credit cards alone. Once again, Bank of America's Preferred Rewards program is a strong example of how deeper engagement will enhance approval odds, credit limits, and overall benefits. US Bank, while similar in structure, is especially generous with cardholders who make their cards their primary spending tool. Customers who regularly use US Bank credit cards, they tend to receive higher limits and more favorable treatment over time. I have an entire video on US Bank credit cards as well, and some tips and tricks on how to get higher limit increases. So if you are currently a US Bank customer, I highly recommend you check that video out. Both banks may appear conservative initially, but as the relationship matures, they often demonstrate significantly more trust and flexibility. Number 9 on our list is Barclays, and this is another bank that I worked at in the past. Barclays operates differently from many major issuers because it primarily focuses on co-branded credit cards rather than cards under its own brand. In the US, Barclays issues cards for partners like JetBlue, Wyndham, Old Navy, Banana Republic, and several other travel and retail organizations. Because these cards are co-branded, the initial credit limits often fall into the moderate range. However, Barclays has gained a reputation for aggressively monitoring customers' accounts for risk indicators or in certain situations. Even small changes in a consumer's credit profile, like a higher balance on a different card or a new credit inquiry, may trigger a credit limit decrease. And I've seen this a lot working there. I mean, there's so many times that consumers would call and have to make sure that there aren't any fraudulent activity on their cards. I worked in the fraud department too. It is very annoying, I would say, but I have seen very high credit limits for people who keep these cards for a long time. While Barclays does not provide competitive approvals or reasonable limits for many consumers, its tendency to reduce limits quickly would make the bank less appealing for those who want long-term limit stability and customers who prefer issuers that maintain consistent limits over time. You may end up finding this level of oversight very restrictive. Number 10 on our list will be Bread Financial. Now, Bread Financial has traditionally served as the lender behind numerous retail store cards. And because these retail partnerships often involve customers with a wide range of credit profiles, initial limits have historically been on the lower side. However, Bread Financial has expanded into more general purpose credit products in recent years, and they have begun offering higher limits to qualified applicants. For example, certain Visa and MasterCard products issued by Bread now include limits well above the threshold associated with typical store cards. Some consumers have reported receiving initial limits over $20,000 on these newer products. Although many cards under the Bread Financial umbrella still cater to retail customers and therefore come with lower limits, the company is gradually shifting towards broader offerings that may appeal to consumers seeking competitive credit card lines outside of the retail environment. So for right now, I would say if you're looking for a store card, like if you're brand new to credit, you don't have a thick credit profile, then you might want to consider some of the Bread Financial retail cards. However, this isn't a bank that I would just recommend. Number 11 on our list is going to be Synchrony Bank. And then I'm going to give you what I think about Synchrony Bank personally, but I'm also going to give you what a lot of users with Synchrony Bank have said in the past. Now, Synchrony Bank, much like Bread, is widely recognized for issuing retail store cards and other co-branded products. These cards generally come with modest limits designed to match lower underwriting thresholds associated with store-branded accounts. Synchrony's reputation in the credit community is that of a conservative issuer that rarely extends generous credit lines unless the applicant has an exceptionally strong credit profile. Even then, increases tend to be gradual rather than substantial. Another defining trait of Synchrony is its tendency to reduce credit limits quickly with internal risk models detected after concerning patterns. These patterns may include increased balances or new approvals from other issuers or changes in utilization or other signs of financial instability. Even if the consumer does not perceive these changes as significant, because of this, consumers seeking very high and stable credit limits may find Synchrony less appealing. Now, for me personally, I have some Synchrony credit cards. One of them is going to be the Synchrony Sam's Club card. And with that card, I started with a $1,000 limit and I raised that card to $20,000 at the time of recording this video. I have an entire video that talks about how I did that, and I do believe that same strategy can be applied to any Synchrony backed card. If you want to watch that video, I'm going to link it right here, but I do want you to keep in mind that Synchrony is very sensitive. If something happens where your utilization increases or something happens with your credit profile, you might expect a decrease. For me, I stay on top of it. Of course, that's just me. So I would recommend that you do the same, because if not, then your experience may not be the same as mine and you may notice some decreases. Number 12 on our list is going to be Goldman Sachs, and that's going to be the Apple Card. A few years ago, the Apple Card issued by Goldman Sachs was known for its surprisingly generous credit limits, even for applicants with limited credit history. At that time, Goldman Sachs was aggressively expanding its consumer credit business, and the Apple Card became a flagship product aimed at reaching new borrowers. However, a lot of you know now that era has ended, and Goldman Sachs has since experienced substantial financial losses from the Apple Card portfolio and is now actively seeking to exit consumer credit cards altogether. As a result, the company's willingness to issue high limits has diminished dramatically. Not only that, but if you had the GM card on the personal or business side, they actually gave that profile to Barclays. So that kind of lets you know that right now they are really like a dying bank, which makes them last on this list as far as credit cards are concerned. It's likely only a matter of time before another institution takes over issuance of the Apple Card. Until that transaction occurs, the product is expected to remain functional, but the generous credit limits that characterized its early years has largely disappeared. Now, beyond the major issuers that we covered in this ranking, there are several smaller regional institutions that deserve a brief mention. For example, we have PenFed Credit Union. Now, PenFed in the last couple of months has really become very restrictive with credit limits. I have an entire video on this if you want to check it out about PenFed credit cards. I highly recommend that you watch that. Other regional banks like PNC, KeyBank, Truist, TD Bank, and First National Bank of Omaha often extend really good credit limits. I have seen this. However, they're not available to everyone, and that's the reason why I didn't put them on this list. It just is not the best option if everyone can apply for their credit cards. So again, while these institutions can certainly provide higher limits under the right circumstances, they do not demonstrate the consistent pattern for larger issuers like Navy Federal or American Express or even Chase, and because of this, they remain outside the primary ranking, but can still be a viable option depending on your financial profile and regional availability. Regardless of the bank or credit union that you work with, one strategy applies universally: keeping your reported income updated. Credit card companies place substantial weight on your income when determining both your initial limits and future increases. If your income rises even modestly, you should always update it within your online account. I have an entire video that talks about this and how to increase your credit limit for almost any single credit card and how to also get approved. Issuers often adjust internal risk models, and when they see an increase in income, that may trigger an automatic credit line increase or improve your approval odds when you request one manually. Many issuers prefer voluntary updates from cardholders because it allows them to better assess your financial capacity and adjust your limit accordingly. I want to thank you guys so much for watching this video. Understanding which issuers offer the highest credit limits gives you a tremendous advantage in the credit world. Whether you're aiming to maximize your credit utilization scores, make a large purchase, or simply enjoy the flexibility that comes with a strong credit foundation, choosing the right issuer can make an enormous difference. Navy Federal sets the standard for generosity, American Express and Chase follow closely behind, and several major banks continue to refine their credit offerings as the market evolves. At the same time, issuers like Capital One and Discover showcase how dramatically credit limits can grow when you approach them with the right strategy and the right expectations. If your goal is to build high credit limits across your entire financial profile, then you want to focus on maintaining excellent payment history, keeping utilization low, updating your income, and applying strategically for issuers that align with your credit stage. Once again, I want to thank you guys so much for watching this video. Your next step is to continue building your knowledge so you can make the best financial decision possible in 2026 and beyond. I'm going to link some videos at the end that I think can be very helpful to you. And again, I appreciate you watching. You guys have a wonderful day.